Welcome to the Deep Dive, where we cut through the noise to bring you the most important nuggets of knowledge. Today, we're plunging into Insulet Corporation's second quarter 2025 performance.
Yeah.
It's an earnings call that certainly turned heads, and we're here to unpack exactly why.
Absolutely. Insulet, ticker PODD, didn't just meet expectations this quarter. They truly delivered a standout performance, sent a very clear, very positive signal to investors.
Right.
So we're going to explore how they managed to not only, crush those Q2 expectations, but also how they're exemplifying this idea of scaling with control.
Scaling with control. I like that framing. Growing fast, but smartly.
Exactly. Rapid growth, but making shrewd financial and operational moves alongside it. We'll dig into how they're pulling this off.
Okay, let's jump right into the headline numbers then, because they are genuinely striking.
They really are.
So Insulet reported non-GAAP adjusted EPS of $1.17. Now, for those of you keeping score, that's their earnings per share adjusted, gives us a clearer picture.
Right. Strips out the one-time stuff.
And it significantly outperformed the consensus estimate, which was, what, 92 cents?
Yeah. Way ahead. And revenue also soared past expectations, hitting $649.1 million against a $612.3 million consensus.
That's an impressive 32.9% year-over-year growth. Just massive.
It is. And, to put these fantastic results in perspective for you, Insulet didn't just beat expectations. They kind of blew past them on every front. Their revenue jumped, like you said, an impressive 33% year-over-year, hitting nearly $650 million, far ahead of what analysts predicted. But what's maybe even more striking is how efficiently they did it.
Okay, tell me about that.
Well, their gross profit margin expanded by almost 2 full percentage points year over year, getting close to 70%.
70% gross margin, wow.
Yeah. And their adjusted operating margin saw an even more dramatic increase, nearly 7 percentage points, reaching 17.8%. This isn't just growth, it's profitable growth.
Right, at an accelerating pace.
Exactly, showing exceptional operational leverage. Their core Omnipod revenue specifically grew 33% year over year. Both U.S. and international segments performing really robustly.
Incredible numbers. Okay, but let's peel back the layers here a bit. What exactly fueled this exceptional growth, especially for their Omnipod 5 system, which seems to be the real star player?
Yeah, it definitely is. The growth is multifaceted, certainly, but at its heart is the Omnipod 5's unique consumer appeal and the strong clinical outcomes.
Yeah.
These factors are attracting just a record number of new customer starts across all their key strategic areas, U.S. Type 1, U.S. Type 2, and international markets.
And you mentioned new starts. What's interesting there?
Well, what's truly fascinating is that over 85% of new U.S. customers are converting from multiple daily injections, MDI.
85% from MDI. That's huge.
It is huge. Think about the patient burden there, going from several shots a day to, a simple, discrete pod. It signals a genuine shift in how people want to manage their diabetes. Plus, roughly a third of U.S. new starts are from Type 2 patients.
Ah, the Type 2 market.
Yeah, which is just a massive, often underserved market. And get this, the company even saw its highest quarter of competitive switches since late 2023.
Switching from competitors.
Exactly. It indicates that their differentiated user-friendly technology is really making a compelling impact. People are actively choosing it over other options.
That distinction, pod, not a pump. That sounds like a powerful selling point, especially maybe for those new to insulin therapy.
I think so. It simplifies things.
Tell us more about their strategy for that type 2 diabetes market, which, as you said, is often seen as this massive untapped opportunity.
You're right. It's huge. And Insulet is positioning itself as a sort of a first mover here, and they're doing it with a very smart approach.
How so?
Well, they're leveraging compelling clinical evidence, particularly from their secure T2D pivotal trial.
Right. I remember seeing headlines about that.
Yeah. This trial showed a significant 0.8% reduction in A1C. That's a big deal clinically. And a 20% improvement in time and range for Type 2 patients.
And importantly,
yeah, this was achieved with less insulin use and minimal weight gain. Those are outcomes that are incredibly appealing to Type 2 patients.
Definitely key concerns for that group.
Absolutely. But here's where it gets even more strategic. Their market access.
Ah, the pharmacy channel.
Exactly. Omnipod is available through nearly 100% of the pharmacy channel. It covers over 300 million lives in a preferred position with low copays, often around like $1 a day.
$1 a day. That's That's very accessible.
It is. This pay-as-you-go model, accessed directly through your local pharmacy, it just removes a huge barrier for many patients compared to traditional, durable medical equipment hoops you have to jump through.
Right, the whole DME process can be a hassle.
A huge hassle. And they're also expanding their sales force to engage both endocrinologists and, importantly, high-prescribing primary care physicians.
Taking it right to the front lines.
Yeah, bringing the science directly to the doctors, making those critical patient decisions. This isn't just about capturing market share. It feels like Insulet is demonstrating a paradigm shift.
How do you mean?
Well, proving that simplifying complex medical tech through easy pharmacy access is kind of the blueprint for unlocking and dominating these massive, historically underserved patient populations.
It really sounds like Insulet is focusing on making diabetes management less of a burden. I mean, going from multiple daily shots to just a pod, not a pump. That's a genuine game changer for someone's daily life, isn't it?
Oh, absolutely. It removes a huge mental and physical load.
But while this domestic story is incredibly compelling, the real test of their scale, with control ambition, as you put it, is how they translate this model globally. How are they expanding beyond the U.S.?
You're right. Global execution is key. And actually, their international story is equally impressive right now.
Yeah.
International business growth was exceptional, nearly 40% year over year.
40%. Wow.
Yeah, and it now accounts for about 30% of total revenues, so a significant chunk.
Which markets are driving that?
Key markets like the UK, France, and Germany are really driving this. You're seeing strong Omnipod 5 adoption and also positive price mix realization as customers upgrade from their older system, the Omnipod Dash.
So upgrades plus new users.
Exactly. And they're also strategically expanding Omnipod 5 into new markets, think Canada, Australia, the Netherlands.
A measured expansion.
Yes, it shows a very balanced approach, deepening penetration in existing strongholds while also doing disciplined expansion into new regions. It perfectly aligns with that scaling with control strategy.
Makes sense.
And we're expecting more details on future market expansions at their Investor Day, which is coming up on November 20th.
Okay, something to watch for. So, impressive operational wins at home and abroad. But you mentioned control. Insulet also made some notable strategic financial moves, right, to strengthen its foundation.
They did. Really smart moves, actually. Management initiated the redemption of the remaining $380 million in convertible notes.
Getting rid of that potential dilution.
Precisely. These are debt instruments that could convert into equity, diluting shareholders down the line. So eliminating them early strengthens shareholder value.
Good move. What else?
They also refinanced their term Loan B, which is a type of senior debt. They reduced the interest rate by 50 basis points.
0.5%. Not insignificant.
No, it's a smart move. It'll save approximately $12 million in interest expense over the remaining term of that loan.
Okay.
And furthermore, they repurchased 93,000 shares for $30 million under their existing authorization.
So debt reduction, lower interest costs, and share buybacks.
Yeah, these actions demonstrate a very proactive approach to enhancing financial flexibility and lowering their cost of capital, all while the company continues its rapid growth. It's that financial management piece that aligns with growing aggressively but responsibly.
This all sounds incredibly positive. I mean, demonstrating not just the growth, but also that financial discipline. What about their updated guidance then? Are they just riding this wave, or are they actually committing to this trajectory long term?
Oh, they're absolutely committing to it, and then some. Insulet significantly raised its full year 2025 guidance.
Okay, by how much?
Total revenue growth is now projected between plus 24% and plus 27% at constant currency.
Wow, up from
their prior guidance of plus 19% to plus 22%. That's a notable jump.
It really is. And margins.
Adjusted operating margin guidance was also raised to 17.0% to 17.5%. That actually exceeds their annual commitment of expanding by at least 100 basis points.
So better than promised.
Exactly. This isn't just a slight beat on guidance. It means they're not only growing faster, but doing so more profitably than they initially anticipated.
In cash flow, often CapEx goes up with this kind of growth.
Right. And they do anticipate higher free cash flow in 2025, despite increased capital expenditures needed to accelerate manufacturing expansion because of this surging global demand.
That's a clear sign of confidence then, in both the demand and their ability to execute.
Absolutely. Confidence in durable demand trends and their execution capability.
Yeah. Okay, we've covered the numbers, the strategy. But a company's leadership often sets the tone. Ashley McAvoy, the CEO, she recently completed her first 100 days, right?
That's right.
What were her key insights, her priorities for the company going forward?
Her focus areas are quite clear and very strategic. Enhancing commercial capabilities, building global brand power, driving global operational and financial scale, and crucially accelerating the pace of innovation.
Okay, those sound like solid pillars.
Yeah, and they aren't just corporate buzzwords, you know. These focus areas, from global branding to faster innovation in their algorithms, they feel critical for Insulet to maintain its edge.
Right, ensuring this growth spurt isn't just temporary.
Exactly. Translating it into long-term market dominance. Specifically on innovation, she's pushing for earlier next-gen sensor integrations.
Connecting to CGMs, right? Continuous glucose monitors.
Yes. Modernizing the customer experience and advancing their algorithms, both the hybrid closed loop, which partially automates insulin, and fully closed loop systems for both type 1 and type 2.
So making the system smarter and easier.
That's the goal. And they're delivering. For instance, the iOS app for Omnipod 5 is now fully available in the US.
That was long awaited by some users.
It was. Also, Dexcom G7 integration is live in Germany. Abbott Libre 2 Plus integration is live in Australia.
Expanding compatibility.
Right. And Libre 3 Plus is planned for 2026. These integrations aren't just, minor product updates. They significantly enhance the patient experience by allowing Omnipod 5 to directly talk to these CGMs.
Creating a seamless, more automated system.
Precisely. And that's a key factor in driving adoption and, frankly, cementing Insulet's user stickiness. Makes it harder to switch away once you're in that ecosystem.
So with all these impressive numbers, strategic moves,
Yeah.
the real question for many of our listeners is, how did the market actually respond? And maybe more importantly, what does that reaction tell us about the broader investor sentiment around Insulet right now?
Yeah, good question. The market reaction was overwhelmingly positive. No ambiguity there. Shares surged approximately 10% in pre-market trading on August 7th, the day of the earnings call.
10% pre-market is pretty strong.
Very strong. And it closed up 9.47% that day with significantly higher trading volume. People were definitely paying attention.
Did that momentum hold?
It did. The positive momentum continued, with shares closing up another 1.17% the following day. And if we connect this to the bigger picture, zoom out a bit.
Yeah.
Over the past year, Insulet has significantly outperformed the broader market and its own sector ETF, the medical devices one.
By how much?
A plus 66.3% return for Insulet over the year. Compare that to the S&P 500 at maybe plus 15.5% and the medical devices ETF at just plus 6.6%.
Wow, so clear outperformance. They're really carving out a distinct and highly valued position.
No doubt about it.
So the market loved it. Analysts are obviously taking notice, but let's play devil's advocate for a moment. Where are the potential cracks? Or maybe what's the most overlooked risk that investors might be dismissing in this wave of optimism?
That's fair.
For instance, you mentioned GAAP EPS was down year over year, while the market focused on adjusted metrics. What's the actual story there for a, let's say, more cautious investor? Is it truly just historical noise or something to keep an eye on?
That's a crucial point to address. And you're right, analysts have maintained a bullish tone. Jefferies raised their target to $375, calling it an outstanding quarter.
Right.
Now, on your point about GAAP EPS, yes, it was down year over year. However, management clarified this was largely due to prior year non-recurring items, things that aren't part of the core ongoing business.
Okay, so one-offs, basically.
Essentially. And the market strongly focused on the robust adjusted metrics. And importantly, that raised guidance, that really reinforced confidence in the operational trajectory.
Suggesting the GAAP dip was mostly historical noise, not a fundamental flaw.
I think that's how the market interpreted it, yeah. It's actually a testament to the strength of their core business that investors looked past that GAAP number. And this also comes at a time when a competitor, Tandem Diabetes Care, saw its stock decline pretty sharply on its own Q2 earnings day.
Interesting comparison. Underscores Insulet's relative momentum.
Exactly. It highlights Insulet's current strength and maybe suggests a shifting landscape in the diabetes tech space.
That's a helpful clarification for our listeners. Okay, looking ahead then, what are the potential catalysts and I guess the watch items for Insulet? What should we be keeping our eyes on after this impressive quarter?
Yeah, good things to track. Beyond just hitting the strong Q3 outlook they provided, you'll want to watch for continued international Dexcom G7 and Abbott Libre integration.
Expanding that ecosystem globally.
Right, that expands their user base and makes the product stickier. Also, further Type-2 data readouts and critically payer coverage updates for that massive market.
Seeing if that pharmacy access advantage holds and expands?
Precisely. Those will be key indicators of sustained penetration. And of course, you always have to watch competitive moves. What are Tandem and Medtronic doing in response?
True, the competitive landscape is always shifting.
Always. And don't forget the Investor Day in November. That's usually a key event for more strategic insights directly from leadership.
Okay.
But really, the overarching narrative seems to be that scale with control idea we started with, combining strong financial performance with smart balance sheet moves and continuous innovation.
Okay, we've analyzed the numbers, the strategy.
Yeah.
Now let's put on our theoretical hedge fund hats.
Right.
In our This Is Not Financial Advice segment, we connect these insights to a provocative, maybe outrageous but plausible trade idea, the kind of what-if scenario an analyst might pitch.
Okay, let's brainstorm. So given Insulet's really impressive early traction in that Type 2 market.
Right, the third of new starts already.
Yeah, and their superior pharmacy channel access, I think the market might still be underestimating the speed and depth of their penetration there.
You think there's more room to run than expected?
Potentially, yes. The simplicity of Omnipod 5, that whole pod, not a pump approach, it just resonates, I think, with a much broader patient base, especially those on MDI who might be intimidated by traditional pumps.
So the trade idea.
Our trade idea. Consider something like a multi-leg bullish option strategy on Insulet, maybe a long-term call option spread. Targeting a price appreciation significantly beyond the current analyst consensus, maybe looking out towards late 2026.
Okay, so a bet on sustained, surprising upside.
Yeah, it involves a significant bet on the continued and maybe even accelerating adoption of Omnipod 5 by Type 2 patients.
And the core thesis behind that bet.
The core thesis is that Insulet's unique combo, the pay-as-you-go pharmacy model, plus that user-friendly design, will unlock an exponentially larger share of the Type 2 market than traditional DME models ever could.
Leading to
Potentially a significant re-rating of the stock, positioning it not just as a device company, but as a true medtech disruptor with almost software-like margins.
Interesting angle.
Yeah, we're talking about a scenario where Type 2 growth just keeps surprising, blowing past even the most optimistic estimates, all driven by that unparalleled ease of access and patient preference.
Food for thought. Definitely. What an insightful deep dive into Insulet's Q2 2025 earnings. It's pretty clear the company delivered exceptional financial results.
No doubt.
Successfully growing across all key segments, strengthening the balance sheet, and really strategically positioning itself for sustained growth in what is still a massive underpenetrated market.
Absolutely. The raised full-year guidance, the ongoing innovation pipeline, especially in Type 2 and those sensor integrations, it paints a very compelling picture.
Yeah.
The market has certainly taken notice, but you get the sense, the story of scale with control and expanding leadership in diabetes tech, while it still has significant room to unfold.
The CEO sounded confident.
Yeah, her comment about being even more confident than I was 100 days ago really kind of sums up the internal sentiment, I think.
Well, thank you for joining us today. We hope this deep dive provides you, our listeners, with some valuable insights. And just a reminder, of course, this information is for educational purposes only. It is definitely not financial advice.
Please always do your own research.
Absolutely.
But as Insulet continues to, as they say, earn its customers' business every 3 days through its unique pod-based model, here's something to ponder. What are the long-term implications for customer stickiness and maybe pricing power in this increasingly competitive diabetes tech landscape?
A good question to mull over. Something to think about until our next deep dive.